Okay, welcome to the deep dive.
Hey there.
Today, we're digging into a whole stack of recent articles, market data, analysis, all focused on the crypto space.
Yeah,
Our mission, really, is to go deep into this stuff and pull out the most important insights for you right now.
that's right. Because the crypto market, it's constantly shifting. And these sources, they give us a really valuable snapshot of where the energy is concentrated,
Yeah,
and what key developments are actually happening.
exactly. And diving into all this material, two areas just immediately jumped out. They're capturing a lot of the recent attention.
Mhm.
On one side, you've got this, well, undeniable buzz and activity around meme coins.
Ah, yes. The highly speculative corner of the market.
Hmm.
Certainly showing signs of life again.
And then on the other side, we're seeing some pretty important trends and foundational developments centered on the Ethereum network.
Two really key areas.
So we're going to unpack both of those and then kind of broaden out to the rest of the market info we looked at.
Hmm.
Let's start with that meme coin momentum.
Sounds good.
So yeah, let's unpack this first area. The significant activity that we've seen recently in the meme coin sector. The sources we looked at really highlighted this strong uptick in social volume around these types of assets.
Yes, the chatter on social media, online communities is a key indicator here. And that increased buzz seems to be, well, directly fueling a lot of the speculative action we're seeing.
And the sources get specific, right? They're naming tokens like PPE, Felatai, and Wojak as examples where this significant activity is really happening.
Precisely. And what's interesting is, while meme coins are famous for extreme volatility, the analysis we saw suggests many of these are actually showing a short-term bullish structure.
Okay, bullish structure. What does that mean exactly?
It basically means the patterns that analysts are seeing in the price charts, they look positive for potential upward movement, at least in the near future.
Right, okay. And this isn't just about chart patterns, is it? The sources point to increased on-chain engagement supporting this view.
Exactly. Think of on-chain engagement as like real activity happening directly on the blockchain network. Transactions, interactions with apps.
Just actually happening.
Yeah, more of that indicates genuine usage or interest beyond just, watching the price ticker.
Gotcha.
And we actually have specific numbers backing this up from the sources. They show some pretty notable recent price movements, like Pepe, P-E-P-E, up over 7.5%.
Oh.
Bonk, that's B-O-N-K, higher by nearly 5%.
Oh.
Then you have Dogwith Hat, W-A-F, surging more than 12%.
Over 12. Okay.
And Popcat,
Yeah.
Poppycat, seeing a jump of over 12.5%.
Those are pretty substantial moves in a short time frame.
Definitely.
And the news flow seems to reinforce this energy. There were reports specifically calling out Poppytat WYF and even a token called Mubarak for surging over 10%. Plus, we saw news about Bonk launching a kill-to-earn first-person shooter game.
Oh, interesting.
Yeah, specifically on the Solana network, and apparently its price is eyeing some key resistance levels right now.
So all this concentrated activity, this price action in meme coins, it raises an interesting question for you, the listener. What might this actually be signaling about the broader market?
That's a good point. It feels like maybe more than just isolated pumps for a few tokens.
It probably is. See, high activity in meme coins, which is often driven by retail investors and social trends, it's frequently interpreted as a signal of increasing risk appetite in the market.
Right. People willing to take more chances.
Exactly. It suggests participants are willing to take on those higher volatility bets, maybe chasing quick gains. This could indicate that enthusiasm is returning to the market more broadly, or, at least that a significant chunk of it is channeling into these highly visible speculative assets.
Like a pulse check.
Yeah, it's like a pulse check on market sentiment. It hints at a return of confidence, or perhaps just, a hunt for rapid returns.
Okay, that gives us a pretty clear picture of the meme coin landscape, at least according to these sources. Now let's pivot. Maybe from the highly speculative to a more foundational area,
Mhm.
the trends and developments happening on the Ethereum network.
Right, shifting focus to a core piece of crypto infrastructure. And the sources we looked at clearly note that Ethereum's gas fees, they're on the rise again.
And rising gas fees usually mean the network's busy, doesn't it? So
Yeah.
what does the source suggest this particular increase points to?
Well, according to the material, this uptick in gas fees strongly suggests a renewed wave of retail participation on the Ethereum network.
Ah,
Gas fees are essentially the cost you pay to do anything on Ethereum sending tokens using a smart contract. When those costs go up, it means there's higher demand to use the network, more activity.
So this kind of connects back to that idea of potential market enthusiasm we were just talking about with meme coins.
Exactly. The sources elaborate on potential drivers for this increased network usage. They specifically mention spikes in NFT trading and activity around new token launches. Both of those tend to be pretty popular with retail participants, and they require gas. Their resurgence points to broader engagement on the network, perhaps beyond just the meme coin hype. It suggests a return of enthusiasm across areas like DeFi and digital collectibles built on Ethereum.
And this activity is happening alongside
Indeed. One piece of news noted the Ethereum Foundation is reportedly undergoing a reorganization. That includes slashing its core team.
slashing its core team. That sounds major.
It's a substantial internal shift, yeah. The full implications, we're still sort of figuring those out, but it's a key development for the network's core governance.
And then there's the regulatory side, which always seems to show ongoing challenges. The SEC, the U.S. Securities and Exchange Commission, is apparently pushing back on Ethereum ETF plans, specifically mentioning proposals from firms like Ari Exosspray.
Yeah, this really highlights the regulatory hurdles that traditional financial products tied to crypto, even major assets like Ethereum, continue to face, at least in certain places. It shows that tension between market demand and regulatory caution.
Still a big hurdle. But on the corporate side, we saw continued engagement. Blockchain firm BTCS Inc. bought 1,000 ETH, that's Ethereum's ticker, via Crypto.com.
Right.
And Robinhood's acquisition of Bitstamp, which was just completed for $200 million, that's relevant here too, since Ethereum is obviously a major asset traded on Bitstamp.
Absolutely. These corporate actions, they demonstrate ongoing accumulation and integration of platforms supporting Ethereum, even with all the regulatory uncertainty swirling around. It's a signal that some traditional players definitely see long-term value and utility there.
So zooming out a bit, why is tracking Ethereum's activity and development so important for you as a listener trying to navigate this space?
Well, because Ethereum serves as foundational infrastructure for just a massive part of the crypto ecosystem.
Yeah.
Think about the thousands of dApps, tokens, projects, all built on top of it.
Right, it's huge.
So its health measured by network activity, gas fees, development progress. It impacts a huge segment of the market. Understanding developments like core team changes or ETF delays gives you crucial context for the entire ecosystem's evolution, its challenges, and its future potential. It's really a bellwether for decentralized technology as a whole.
All right, so we've explored the, let's say, highly speculative world of meme coins and the more foundational shifts happening on Ethereum. But the sources gave us an even wider view of the market landscape. Let's broaden our scope now, look at some other major cryptocurrencies and significant news items that crossed our desks.
Okay, let's start with Bitcoin, the market leader. The price reported in the sources was around $105,241, showing a very slight dip, like 0.19% at the time.
Okay, pretty flat then. But despite any short-term price fluctuations, one perspective highlighted was from Bitfinex analysts. They believe Bitcoin is structurally strong.
Yeah, that's a notable view, especially amidst volatility. It suggests that underlying factors, maybe adoption trends, institutional holding, network fundamentals, remain robust even through pullbacks.
Makes sense.
We also saw news that 21 Shares announced a 3-for-1 share split for its spot Bitcoin ETF.
Oh, like a traditional stock split.
Exactly. An exchange-traded fund move, typical in traditional finance, now being applied to crypto investment products.
Interesting. And there was a brief mention in a weekly recap that MicroStrategy added another 4,020 Bitcoin to its holdings.
Still stacking sats. Shows the continued corporate accumulation strategy.
Okay, moving on to XRP. Its price was listed around $2.19, up about 1.14%. The sources presented a bit of a mixed picture here, though, noting that XRP is struggling near support levels and that XRP investment products recorded a second consecutive week of outflows. That sounds a bit bearish.
It does, yeah. Outflows from investment products can indicate waning institutional interest, at least in the short term. However, contrasting that, we also saw news about VivoPower planning a pretty substantial $100 million XRP buy through BitGo.
100 million. Wow, okay, so conflicting signals.
Exactly. It highlights those sometimes conflicting signals you find in crypto all the time, negative short-term trends, right alongside potential major positive inflows.
Yeah, absolutely. And the article titles we saw reflected this complexity too. Mentions of XRP gaining an SEC edge were right alongside discussions of the Ripple Foundation making moves and comparisons of best XRP rivals to buy. It really shows a diverse narrative landscape around XRP right now.
Definitely a complex picture. Okay, next up, Solana. Priced around $159.95, showing a healthy gain of 2.68%.
And the news for Solana included Nugenif investing $30 million into a Solana staking strategy.
Right, that points to institutional interest in generating yield within the Solana ecosystem. Staking is becoming a big area.
But echoing the challenges we saw with Ethereum.
Yep. The sources also note the SEC pushing back on Solana ETF plans submitted by REX Osprey, highlighting those similar regulatory hurdles for other major networks too.
Seems like a theme. Now, beyond these major coins, our sources provided just a wealth of other notable news snippets and perspectives across the ecosystem.
Yeah, a lot going on.
For instance, APT, that's the Aptos token, it rose 5% after its CEO was invited to testify before the U.S. Congress.
That kind of direct engagement with policymakers, that's a pretty significant step for the industry's maturation and, the future regulatory landscape.
Definitely. On a less positive note, though, the Nervos network suffered a major exploit. Around $3.9 million stolen from their Force bridge.
Ouch. Yeah, that's a stark reminder that security remains a critical and ongoing challenge across the entire space. Can't forget that.
No, you can't. And Circle, the issuer of the USDC stablecoin, they've been particularly active lately.
Very busy.
Filing for an IPO, an initial public offering, aiming for a $7.2 billion valuation with a second share offering, and partnering with RedoPay for crypto to fiat transfers.
Right. Circle's actions really underscore the significant efforts being made to integrate crypto, especially stablecoins, more seamlessly into traditional financial systems.
Makes sense.
We also saw Tether launching XAU Taro, which is an omni-chain version of its gold-backed token, expanding the reach and accessibility of physically backed assets on the blockchain.
Interesting. And confirming a point we touched on earlier, Robinhood completed its $200 million acquisition of Bitstamp.
Yep, done deal. That's a notable consolidation move in the exchange landscape.
So looking across all these sources, it's just clear the crypto information landscape is vast. It covers every angle. We saw articles covering price predictions for a whole host of other coins.
Oh, yeah.
From established names you might know like Monero, XMR, Chainlink, LNK, Cardano, ADA, Dogecoin, DOGE, Shiba Inu, to others like Zebic Network, Energy Web Token, Tron, Unilabs, POL, XYZ, DOT. I mean, the list goes on.
Plus, there were helpful learning guides, right, for newcomers or those exploring specific niches, covering topics like how to start with Bitcoin, what is Deegan, what is Wrapsteth, what is Cody, what is a crypto presale. Useful stuff.
Yeah, foundational knowledge and opinion pieces weighing in on critical issues like discussions around the $40 billion scam economy in crypto, a reminder of the risks.
Very important reminder.
And the idea that smart contracts need community intelligence to evolve effectively.
And naturally, a good portion of the material also included updates and insights from various projects across the ecosystem, like Lightchain AI, Near Protocol, Tron, Unilabs, etc. This sheer breadth of topics in the sources. It really highlights how multifaceted and dynamic the crypto space is right now.
Okay, let's try and pull all these threads together then. We've got the highly visible meme coin action, right? The rising activity and foundational developments on Ethereum. The movements and contrasting signals around major coins like Bitcoin, XRP, Solana. Plus this flurry of news covering everything from regulatory challenges, security risks, to increasing integration with TradFi, ongoing project development. How does this mosaic fit together? What does that concentrated buzz in meme coins and Ethereum activity tell us when we view it alongside everything else?
Well, I think it suggests a market that's operating on multiple layers simultaneously. On one level, there's clear evidence of renewed speculative interest and potentially retail return. We see that vividly in the meme coin surges, and it's reflected in those rising Ethereum gas fees driven by things like NFT trading and new token launches.
Right, so the excitement part of crypto, the speculation, it's definitely back on the radar.
It is. But critically, alongside that speculation, the sources show that fundamental development is continuing. Core networks are evolving. Corporate entities are accumulating assets like Bitcoin and Ethereum.
Like MicroStrategy.
Exactly. And traditional finance is actively exploring or integrating crypto, whether that's through ETFs, acquisitions like Robinhood Bitstamp, or stablecoin partnerships like Circles. But then you also have the ongoing challenges, security exploits like Nervos, the persistent push and pull with regulators. It all adds complexity and reminds us the space is still maturing.
Okay, so for you, the listener, trying to make sense of all this information, what are the key takeaways here?
Okay, well, first, volatility remains a constant. Expect big swings, that's just part of crypto. Second, recognize the market isn't a monolith. There are simultaneous forces at play. Retail-driven speculation is happening right alongside significant underlying development, infrastructure building, and institutional maneuvering.
Got it. Two tracks happening at once.
Kind of. Third, regulatory shifts, like the SEC's stance on ETFs or even a CEO testifying before Congress. They're increasingly impactful and definitely worth tracking. And finally, despite challenges like security risks, the ecosystem continues to innovate and integrate, however bumpily, into the broader financial world.
Right, this complex blend. Speculative frenzy, core development, regulatory hurdles. It presents a really interesting picture, and it leaves us with a final, maybe provocative thought for you to consider as you process all this information.
Yeah.
Given these simultaneous trends, the highly visible retail speculation, the quiet but persistent fundamental building, and the friction with traditional systems, what does this current phase of the crypto market primarily represent? Is it mostly just a return to the hype-driven cycles of the past? Or are we actually witnessing fundamental shifts in integration happening because the space is maturing and maybe the hype is just a side effect? How do you weigh those very different signals?
That's a challenging question,
Yeah.
but it's an essential one for really understanding the landscape right now.
Yeah, absolutely. Well, thank you for joining us on this deep dive into the recent activity and insights from the crypto market, drawing from all the sources we've reviewed today.
Yeah, we hope this helps you navigate the complexity out there.
Keep thinking about that question. We'll be back soon with another deep dive.